In today's video, we're going to be looking at Consumer Price Index, which is also known as CPI. We want to take our time to go through some chart works, analyze a few pairs, position ourselves nicely ahead of this major high impact news release. If you're new to the YouTube channel, make sure you subscribe, turn on notifications so that you'll be notified when we drop new updates like this, and stay tuned. Let's get into the video. So CPI is one of the most looked out for high impact news events that traders trade across the board. However, we're going to be seeing this major news announcement dropping in a few hours GMT +1, that's 1:30 p.m. from my time zone, and basically we have enough time before the CPI news release, and we want to take out some time, look at the chart, do some technical analysis, weigh some probabilities that could play out ahead of this market, and position ourselves for some decent risk and of course with high reward ratio. So let's go over to my chart. Here on, we're going to be starting off with the dollar index. DXY is currently what we have on my screen here. What I want to do ideally is I'll start off with the daily chart, right? So on the daily chart, as we can see here on my screen, we are currently trading around this level. The market is currently going to shut down in a few hours, and of course ideally I'll always want to use my daily chart because it gives me the bigger picture perspective of what to expect in the market. So if I zoom in closely here, we'll get to see the price action we have on the dollar index, that's DXY. Currently we're having this insane run up in price. Now this is as a result of NFP news release that happened on Friday, and prior before this NFP release we actually had a detailed market breakdown on what to expect. The video will be linked in the description of this particular playlist. This playlist contains videos of chart works and fundamental analysis on high impact news. So if we look at this closely, we had this insane strong closure on the dollar index. We had quite a bullish run. However, if we look at this closely, price is still moving back and forth within this level. We had a slow in momentum with what the dollar index is, so we're going to move over to lower time frames to size up this position. As it is right now, dollar index could gain more strength towards the upside, that is straight towards this level for the CPI release. However, if this news announcement comes out negative for the dollar, we could of course sell off back down here. However, when it comes to trading news events and stuff like this, you want to be open-minded, you want to be very flexible, because the market could play out either in your direction or against you. Times when the market plays against us, we want to mitigate our risk, we want to cut our losses short. However, if price like aligns and plays out towards our direction, we still want to make the most out of it. Hence, while we are doing a detailed analysis, keyword detailed analysis, to help us size up the market, look at different probabilities and know what to expect, and we'll have a calculated risk here. So when we drop down to the hourly chart, I want to look at my 4-hour time frame here. Now on the 4-hour time frame, we are having the dollar index currently pulling back towards this low here, and we could potentially get enough momentum to trade higher. However, all of these are yet to be seen. We are still analyzing the market, right? So if we zoom out close at this chart, if we zoom out, we'll see that this here has been the major bone of contention. You can see what we have here and what we had here in the past. So hence we can see that this is like a temporal resistance that is holding this price from going higher. However, if we do break from this level, that is like a potential breaker that will open the floodgates for a continuation on this. That could be a continuation on this bullish trend on the dollar index. Now, with a strengthening on the dollar index, of course, is going to give us opportunities across other pairs, which is what we're going to be focusing on here. So if I zoom in closely now, move this to the side. On the hourly chart, there's something interesting that I want to talk on here on the hourly chart. Now, DXY opened with a gap for this particular trading week. This gap is here, and price has been contained around this region for quite some time now, for more than 48 hours now. So what I want to see, or what I'm expecting, is price to trickle all its way down here to fill up this gap. Now, filling up this gap would give us that enough momentum to trade towards the upside. We want to cover up this gap we're having here in price. And if you look at crosses like your Euro USD, GBP USD, you also have gaps on this side of the market, Monday market open. So it's yet to be filled, and there is a very high chance price will want to fill this level before we get any significant move either to the upside or to the downside. Remember, we want to be flexible, we want to be open-minded, and we want to look at multiple scenarios here. So now let's take a look at gold. Gold is my favorite here, or rather, let's take a look at my watch list. I have my pairs which I'm focusing on for this particular news here. So first off is gold. We'll also look at other dollar crosses like your AUD USD and NZD USD. So first off, looking at gold, gold is printing an insane setup. This setup is going to create lots of momentum and volatility across gold. This is a major classical price action pattern that we are having here on gold. So let's analyze together, guys. So first off, we want to pick out our key levels. So this here has been a significant key level here where price has reacted in the past, and we want to also pick out a key significant level that's like a low which has been holding price for quite some time now. So if you look at this closely, we have a chart formation here, classical chart formation or print on our screen. We have the left shoulder here, we have the head, and we have the right shoulder here. Now ideally, this kind of chart formation suggests a sell side when we see this show up on the market, and we're seeing this print on the higher time frame, on the daily to be specific. Now is usually it's going to take lots of time for a daily candle to fully materialize and form, and this was a full trading day, a whole day of a bearish movement on gold. But however, we've seen the high time frame key levels. What we want to do now is we want to scale down to lower time frames to look for good opportunities where we can get an entry, where we can get an entry to capitalize on the move which could play out on gold. Now we have our structural high, we have our structural low. However, if we look further, there is another low here that is also a footprint that price marked out in the past. All right, so let's throw in all of these labeling our chart so that we can effectively analyze and we can remember our markups from the higher time frame. So here we have the left shoulder. I'm going to use a short format of representing this, and also here we have the head, and this other side we have the right shoulder. Okay, so let's drop down to the hourly chart. Now on the 4-hour chart, now this is what we have here on the 4-hour chart. So if we look at the left side of our screen, initially we have this insane impulsive move down. We went into this accumulation phase. Price went up here to tag this level, and we retraced back up in the corrective manner where we have this in the form of a channel. These are like classical patterns which the market usually prints, and these price actions, more often than not, they usually play out, and they can play out in many scenarios, guys. They have like different scenarios, or what I say, templates, which price would play out. There's no one way that it always plays out. It can play out in multiple ways. It could be like a break and retest, it could be like a fake out, or whatever word you want to use to describe it. Now, looking at this now, we can clearly see that price is trading towards this level here. This is the last footprint we had before the impulsive drop, where we had price dropping aggressively for the entire day. So looking at this now, we are few pips away from this level. I want to see how price will retest this level here, and if we do get a good rejection, that will hint this sell is ready, and we'll be targeting here as our first profit taking level. And if price should go even further, this will be like our TP1, and here might give us this level might give us a retest, and here should be like our TP2. So this is like a longer time play out on gold. Now on the flip side, if dollar should lose momentum or lose strength, we're going to see gold buying to the upside, and this chart pattern could get invalidated. So on the other hand, for the buy side, we could potentially see price probably retracing and bouncing off to trade towards this high. But however, I'm bearish on gold, and I'm still open-minded to the possibility that this could get invalidated. Now over to the other setups I have, or the other things I have on my watch list. I have NZD/USD and AUD/USD. I'm also bearish on this, reason being the directional move or eyeballing for DXY. So looking at NZD/USD on the daily time frame as well, we dropped off from this level here. This is a significant high in the market, and this is like our structural low as well. So we're doing a top-down analysis. We want to see the directional move from the high time frame as well. Now if we zoom in closely, we can see, if we throw in our trend line 2 here, price has been trending up for some time now, and this has broken out from this level here. We've sold out, we've broken out, and we are same price retesting. So we could potentially call this like the neckline where price wants to retest. So if you look back to the left, you'll see that this horizontal ray line cuts across a major resistance level where price is trading towards. Now when we drop down to our hourly chart here, we'll get to see this much clearly. Some people would like to throw in your fib to size this up and see where we're going to see that retracement level, if it's going to be due. Now if we use this here, you can see that from my fib 2, I configured this with the 0.618 level, the 0.38 level, and the 0.7 level. Now this here, for preference, I'll prefer to see price reject off the 0.6 level, and you can see this goes in line with what we're looking at, the potential break and retest. Now also price is bouncing off from this temporal level here, which is like a support. If you look to the left, you can see how price has been reacting over time around this level now. So we want to position ourselves and see how we'll probably reject off this level to see that sells the downside. And also when this setup gets invalidated, of course price could continue to trade higher and create new higher highs here, but then was bullish for the time being here. Now over to the last on my watch here, which is AUD/USD. Right now AUD/USD is also having a similar setup or price action for what we're looking at, the same as NZD/USD. So of course we want to mark out our structural high. This here is our structural high, and this is like our structural low as well. And here has been, a major price point where we get strong rejection in price over time. We're not saying this level is not a level that can be invalidated or broken, but we're saying that this level has been significant for quite some time now. Okay, so dropping down to the hourly chart now. On the hourly chart, you get to see that this particular chart build up is very similar to what we have on NZD/USD. So if we compare these charts side by side, if I get my NZD/USD here, and if you look at this, you see, let's take this to the 4-hour charts as well. You will see that this price action is very, very similar. Okay, they are very similar. All right, so back to AUD/USD, just to draw up our conclusion here. Now on AUD/USD, if we look at this closely, this is like the level we are potentially trading towards to retest. And for profit taking, if this sell should hold, this will be like our first target, our TP2, and this will be like our TP1. So just to be sure or label our chart properly, this will be like TP2, and this will be like our TP1. This will be like our TP1. So having identified our profit taking level is also important. We know where to cut our losses short if the trade should not play out, if price should get above our price point. So we want to ideally use your stops above this level. Anything around 20 pips should be fine, and also you do your position sizing well based off your account size. To sum up this analysis, dollar is like our primary focus for CPI, which is like the consumer price index for the US. And basically, if the dollar loses strength, we know that this is going to buy. If the dollar gains strength, these pairs are going to sell off aggressively, hence continuing that move which NFP has already built up, that momentum which we got that insane buys during the NFP week. Now to add a few tips here and there, ideally I want to focus my energy on gold, because gold is going to reward me big time for the risk I'm taking. And if I should probably add 1 or 2 pairs to it, I would take either AUD/USD or NZD/USD. I would not want to take all 3 pairs on the go. Why? Because that is going to be too much risk allocated to the dollar pairs and towards one direction. So I want to take 1 or at most 2 setups. All right guys, so that will be all for today. If you find this video helpful, do well to hit the like button, drop a comment, tell us what do you think about the CPI, what are you speculating, and also share with your friends. Until next time, keep it simple.